I just got this email from somebody who was so happy, but then as the email went on, just started realizing that there's something seriously wrong. Hey Javier, I'm writing you this email because I've just heard the great news from my lender. I actually just qualified for almost $500,000. In my city, $500,000 will get me a really nice house that I can move all of my family in. I'm not married or don't have any kids, but my mom and dad live with me, and I just can't wait to get them a nice house for them. My plan is to give this house to them eventually once I finally find somebody, and we'll continue to buy something else. I currently make $80,000 a year and I have no debt. I'm writing you this email because everyone seems to be really happy with me. My parents, my realtor, my lender, but there's just something that seems really off. There's this pit in my stomach that's just making me feel like something is just weird. So I started watching your videos last night and I figured I'd email you to see what your thoughts are. The more I watch your videos, the more I realize that maybe I might be making a huge mistake, and I'm regretting having told my parents because now they have high expectations of a house they can get. So what do I do? Please help me. Wow. When it comes to parents, they just add like a nice little cherry on the top to our stresses, don't they? Well, first and foremost, in my 31 years of life, there's something I learned. Every time I've ignored my gut feeling, it usually doesn't end well for me. And now my gut being bigger than ever, I always listen to it. Let's kind of get into this. Let's acknowledge the good. You are debt free. Amazing. You can tell me your age here, but for someone, you seem young in your position. Really great that you made the right financial decisions or maybe got yourself out of debt. Not all of us can say you did that, so good for you. So let's see what's going on here. There's not a scam or anything weird going on. It's just unfortunately how our financial system works. So you said you make about $80,000 a year. So really, let's get the monthly gross income from that number. So you make about, I don't know, $6,666, give or take. So a lender, depending on the mortgage, will qualify you. I think FHA is 43, conventional 45 up to 50. So on range, 43 to 45%. So what's going on here is they get your gross monthly income, they multiply it by 45, and from this number, they can reduce any monthly debt obligations you have. Since you have no debt obligations, you qualify up to that amount. Now, with it being conventional, I wouldn't be surprised if they can maybe even push it up to 50%. So 3,333. Remember, a lender will not give you what's the number that you should afford. They're going to tell you the number that you qualify for. So it is important that you do this number beforehand so that way when you talk to your lender, you say, by the way, this is the monthly payment I need to go for. We can kind of work our way backward and figure out what that purchase price would be for that mortgage payment. So here in Arizona, our purchase price will be $500K, 50% for the property tax and insurance, let's call it about 20%. Conventional, let's say you're doing, 20% down. Interest rate is probably like around 7% around there. So that mortgage payment adds up to about, give or take, $2,953. So I don't know if you're doing 20%. Let's say if you're doing, 5%, that monthly MI would probably be really low since you have no debts. So we're like 35, 39. So I'm assuming, once again, I'm using Arizona numbers here. So you probably are in a situation where you're putting more of a down payment, or you are in an area where there's low taxes, low insurances, or something along those lines. So I'm sure in your specific area, they can make a $500,000 purchase price work. But you have to think about it like this, okay? Our system, in a way, sets us up to fail. I actually did a little research here, and funny enough, here's a little quick history of how it ended up being the way it is. In the early days of banking, lenders relied heavily on a personal relationship and local knowledge to assess a borrower's ability to repay a loan. Income verification was a lot less formal, and decisions were based on trust and personal reputation. With the Industrial Revolution came an increased wage. As more people earned regular salaries, banks began to formalize the lending process. Gross income became a useful metric because it was straightforward and verifiable. And the reason they don't use net income is gross income provides a consistent basis of comparison across different borrowers. Net income can vary significantly due to the individual tax situation, deductions, and a personal financial arrangement. So the way I hear it, please correct me if I'm wrong, is this just a lot easier for these banks to use gross income. But their ease is creating dangerous situations. And all that to say, this, my friend, for you, you were right to trust your gut because it is a dangerous situation. So let's break down how it would look like if we use your net income, because you're not really taking home $6,666. You're probably taking home about 75% of that. So if we get $6,666, Let's say you multiply that by 75%. So you're really taking home about $49.95. Well, for your $3,300 monthly payment, that's about 66% of your actual take-home income. Now, this is absolutely dangerous because that means if you get paid twice a month, your first check isn't enough to pay your mortgage. You have to actually use your second check, and meaning that you only have, 34% for everything else. Now, I've always said that your mortgage payment should be 25% to 30% of your net income, but lately, I've been getting a lot of messages and comments from you guys about how it's just not realistic anymore, especially for those that are in larger cities. Larger cities, not LA. LA is just completely messed up, but just so you know. But let's talk about other regular larger cities. I even talked to someone recently who is in an excellent situation with really high savings, really high house savings, excellent income, no debt, but they just are not in a position where they can technically afford a house. It would be like 35 or even 40% of their income, even though they have all these other, contributing factors that were great. So I'll say this, okay? If you are insistent on owning your home, there's a few rules that you need to check first. Hold on, my wife is calling me. Your mortgage payment has to be less or about the same than it costs to rent a house in your area. 2, your emergency funds need to be thicker than me right now. Really thick, okay? 6 months plus. Your housing savings need to be solid. You need to have at least 5 to 10% at least. Like if you're not 20%, that's fine, but at least a big chunk separate from your emergency funds. And you need to not move for a very long time. Only then maybe you can do an exception to maybe squeeze it up to 40%. But there is a lot of ifs in that statement, and even with all those ifs, I still worry about you. I would still freak out. So that being said, 66% isn't even part of the equation. So it is terrifying, my friend, to think that the bank would qualify you for that much, and everyone else is happy around you. Not your mom. Your mom and dad, they probably don't have too much financial education. They're probably just seeing the house. They're like, he can afford it, and you got him happy. Was it a mistake to tell him? Probably. Your real estate agent is a salesperson. Your lender is a salesperson. It needs to be, instead of them guiding you on what your payment should be, you need to figure that out for yourself. Go to them and say, this is the payment that works for me. And if that doesn't work at the moment, then you have some serious reconsiderations to make. But what advice would you give to this young fellow? Would you say the same advice that I told him, or would you tell him something completely different? Please let him know below. He will be looking at the comments, so let's not be too rude. And of course, if you guys are looking for more can you afford scenarios, I have another video here that you can watch. And of course, you can always email me any of your real estate questions or affordability questions. I'm available to help you anytime, guys. Also, by the way, if you're looking for an agent in Phoenix, Arizona, give me a call. Has to sell these cheeks because it's getting tight this summer. Thank you guys for watching. See you on the next one.